What's up, everybody? It's Stock Picks by Tim again, and I'm here to talk about Aquestive Therapeutics. AQST is the ticker symbol, and I'm going to show you like about an 8-minute clip of the earnings call towards the end here. But first, I'm going to get into the chart. We're going to see what our friends at TipRanks think, and then we're also going to go over a positive article about their cash burn. But let's get into this one, guys. All right, now first off, checking in with TipRanks, the analysts say this is a $15 stock. That's 161% upside with a high of 28, which I would disregard that, low of 7. So we're still looking at a positive price target here. Now these aren't the top ranked analysts. Not very many analysts cover this. This is a very small market cap. It's like a $230 million market cap, very small. Still a lot of room to move here. But I'd say definitely for me, my price target here with this one is $10 leading up to December. We'll see if it happens. We'll see if people pile into this. But I definitely think it can happen as people get FOMO as we come into December and reach that December 23 FDA either approval or denial. Now hopping over here at the charts, you can see that we've been running up quite a bit. We beat those earnings, did a pretty great job. I'm very happy with that. Had a nice run up. We had like a 10% day today. If you're considering buying in, maybe just dollar cost average, I would definitely wait for this to come back down a little bit at least, because it is overbought on the 6-month, the 3-month. 1 month is very close to overbought. But other than that, as for a support, I definitely see at least around the $5 being a support level. I don't think we're going to go under that, especially as we get close to that FDA trial and that potential positive catalyst and people still potentially piling in. Combine that with the positive earnings, I think this thing still has a lot of upside here. But I do see us potentially reaching a slight resistance here at that 6. But once we crush that, I see our next resistance being about 680 to that $7 mark, because if you look back, it doesn't really hold over 680 to $7 for very long. And you can actually go back here. It's done it before. So I'm going to go with short term. I think that 675 is going to be, quite a resistance for us. But if we do break that, I definitely expect this to come potentially to that $10 range by the FDA date. You can quote me on that. If I'm wrong, I'm wrong, but I'm feeling pretty positive about this one, especially just with that positive news here. And speaking of positive news, we've got articles actually writing positive news about this one lately. This was just very recent here. November 2 was when this was written. And they basically go into that they expect that Aquestive is going to break even by about 2023, turning a profit of $32 million in 2023. So that's just a couple years from now. But it's definitely nice to see more positive news. This could also be combined with that positive earnings, possibly be the reason that this went up so much potentially. It could be the combination of just all these positive news catalysts, hitting us in all these different directions. And combine that with the fact that the market's just been on a nice rally lately. And one last thing here before I leave you guys with the 10 minutes out of the earnings call that I wanted to show you guys. It was about a 45-minute earnings call. I listened through it and cut through about 10 minutes of it. But this I think is the kind of information that's most important out of it. But before you go to that, I wanted to show you, like I said, this is a very low market cap. You're talking about a $229 million market cap. And they did absolutely crush earnings and revenue, beat by 20%. Very nice. Still, negative earnings per share, definitely burning cash. But if we do get this FDA approval, the numbers are definitely likely to change, and they will probably be profitable before that 2023, like the analysts are saying, in my opinion. But you can see here that they actually have beaten a lot of their earnings. But honestly, for them to keep doing really good and, making this share price make sense, especially when it gets to $10, $15 in the future potentially, they definitely have to, succeed in the FDA approval. And that catalyst, like I said, is December 23rd. But without further ado, we're going to get into that earnings call. Thanks again, guys.
It's been a very exciting few months since we last spoke to you. Through the third quarter, we executed as we committed on our key priorities for the two most important value drivers for the company, Libervant and Aquestive 109. Libervant continues to progress through the review process with the FDA, and we had very exciting results for AQST 109. We appear to have solved for the last remaining hurdle of AQST 109, absorption speed, or Tmax, compared to auto-injectors like EpiPen and AviQ, the current standard of care for this patient population. Additionally, our ongoing business continues to be strong. As you saw in our release last night, and as Ernie will discuss more fully in a few minutes, we have improved our outlook and guidance for the year. Let's start with Libervant. We're focused on the upcoming PDUFA date of December 23rd and the ongoing interactions with the FDA regarding the NDA for Libervant that was resubmitted in June. We continue to have multiple interactions with the FDA as they completed the mid-cycle review of our application in late September. The FDA has approved for use the trade name for Libervant, and they have made recommendations for changes in language relating to our packaging. Additionally, we've spoken to the FDA Office of Orphan Products Development. We have provided additional information supplementing our original correspondence to the group. We continue to believe that we have provided a strong set of facts supporting a finding that Libervant represents a major contribution to patient care and thereby a decision by the FDA of clinical superiority to prior approved products for this indication. Libervant is an exciting product for the underserved epilepsy community, and we are focused on ensuring patients have the broadest access to this product as quickly as possible. If approved by the FDA for U.S. market access, Libervant would be the first orally delivered diazepam product for the management of seizure clusters. With more patients over the last 12 months across all age groups continuing to utilize the diazepam rectal gel product versus the diazepam nasal products despite good payer coverage. The vast majority of potential patients are still not accessing either of these difficult to interact with alternatives. Providing a preferred method of delivery, an oral product, that can be used where it's needed and when it's needed and is the size of a postage stamp has the potential to provide a highly differentiated treatment option for this patient population. Maximizing our footprint, facilitating patient access, and garnering visibility across the epilepsy community are important foundational elements to our success. We believe that every patient should have a seizure action plan with a rescue treatment available. We believe that Libervant represents an attractive, non-invasive, and innovative product for this population. Preparations are advancing for the commercial launch of Libervant, if approved by the FDA, as soon as possible after that approval. The continued commercial progress of Sympazan has laid the foundation for the launch of Libervant by gaining penetration and payer coverage for our farm film-based CNS products. We continue to believe Libervant is an important choice for epilepsy patients in a form they prefer. We remain excited about and believe Libervant continues to be a meaningful opportunity for the company and will generate material and significant sales revenue at peak. Our next priority is advancing our epinephrine product candidate for severe allergic reactions, including anaphylaxis, AQST 109. As we have discussed previously, we have demonstrated the ability to consistently deliver therapeutic doses of epinephrine, comparable to the standard of care autoinjectors. The remaining challenge was modifying our formulation to achieve the absorption rate necessary to produce a Tmax equally comparable to those autoinjectors. Based on the top-line data released just last week from our first-in-human phase 1 PK clinical trial for AQST 109, we believe we have met that hurdle. The formulations tested during the trial resulted in Tmax of 15 minutes, comparable to the autoinjectors and within a narrower range than the published data for those products. AQST 109, if approved, will be the first orally administered epinephrine-based treatment for anaphylaxis. AQST 109 has the potential to be a transformative treatment for patients in this population, especially those who don't carry their medications regularly because they are resistant to injections or don't find the devices easy to use or carry. This is another example of how our knowledge and technology can create value through a better treatment alternative that can be used where it's needed, when it's needed, and in a form, oral, that is preferred by most patients. We're very excited by these findings and continue to believe that patients will embrace this needle-free, user-friendly alternative should it be approved by the FDA and other regulators around the world. We plan to commence a second adaptive design study that will compare the PK and PD of our target formulation against epinephrine IM injection in Canada during the fourth quarter of 2021. This study will be used to determine the final formulation and dosage strength that will be used to manufacture registration batches and conduct pivotal PK studies in 2022. We have submitted our data package for the pre-IND meeting to the FDA and anticipate receiving a written response from the agency before the end of the year. We anticipate that this feedback will provide us with greater insights as we plan for the development of AQST-109 under the 505(b)(2) pathway and begin to enter pivotal trials in the U.S. next year. Next, Sympazan. Sympazan continued to perform well in the third quarter of 2021, which marked its 11th period of quarter-over-quarter growth. Sympazan continues to set the stage for a potential launch of Libervant. We have always thought it valuable to have two complementary products available to a common set of prescribers, with Sympazan leading the way prior to a potential launch of Libervant. We feel that our commercial team, with their efforts on Sympazan, has done a good job of establishing our footprint. In conclusion, as we progress through the fourth quarter and head toward 2022, we're focused on advancing our proprietary products. Our team is continuing to engage with the FDA regarding the NDA for Libervant ahead of the December PDUFA date. Launch preparations are advancing, and if approved by the FDA, we plan to launch shortly after market access is granted. Aquestive 109 reported exciting top-line data, and we're moving to a new study to determine final formulation and dose strength before year-end. We also anticipate feedback from the FDA regarding our pre-IND meeting data package before the end of December. Our ongoing business continues to perform well, and we look forward to delivering the strong results we have guided to here today.